guest says keep an eye out for super bargains in this market as we look for a bottom. Well, have we hit one yet? Joining us now is Tyler Vernon, principal with Biltmore Capital Advisors. Biltmore has $600 million under management. Tyler, good of you to be here. Short run, are we done with the hedge fund selling, the forced selling, the reducing bets with borrowed money?
We don't think so. We think there's a long way to go. We think this massive deleveraging that's going on in the economy, we've just hit the tip of the iceberg. We really feel that as investors get their statements back from September and they see how much that they're down, there's going to be a real thought as far as the risk assessment, whether it be institutions and individual investors. Hedge funds that had never seen more than a 2 to 4% drawdown over the last 8 years saw 8 to 12% drawdowns. People are going to be wondering what's going on in there.
Well, they're getting some of their money back, investors are, for whether you're retail, and particularly out of hedge funds. They're getting, whether it's endowments or individuals. So where are they going to put that money?
As far as the money that they're redeeming?
Yeah.
Well, I think there's some great buys out there, which we'll talk about. I think corporate bonds, for example, I think corporate bonds are trading at spreads over treasuries that we haven't seen since this bad word, Great Depression. PepsiCo floated a bond the other day at 8%. I mean, a long-term bond at 8%, a AAA-rated company. And we think there's unbelievable buys in corporate bonds right now. I think as we...
Are they better bargains than you get in the stock market?
I think over the short term, yes. I think what we're going to be seeing is literally hundreds of billions of dollars coming out of the stock market because of these forced hedge fund redemptions with, leverage. If these people want to take $10 million out of the market as far as a high net worth investor, these hedge funds are going to have to liquidate 30, 40 million in order to get that. So with this massive deleveraging in hedge funds that we're going to see, we're going to be pulling hundreds of billions of dollars out of the market. So we see the market falling, at least retesting the lows that we've seen. And if they manage to get through those lows, which we think that they will, we see another 15% as far as a new bottom. And we think at that point, there'll be great opportunities to buy stocks at that point.
So you expect the market to fall another 15%?
We do.
And you're looking at the S&P 500 for that?
We do. We're going to be looking at the recent lows. I think there was some critical support, the lows a couple weeks ago. We're really waiting on buying. We're advising clients not to go in right now. But again, as we potentially go down to some new lows, I think it'll be great opportunity.
You see some medium-term positives, though. Baby boomers, we get past the election, and then the Federal Reserve throwing everything at this problem.
Yeah, I tell you, there's going to be some great opportunities here. You're right, baby boomers right now. While the credit crisis has really restricted a lot of the borrowing right now, and the reverse wealth effect, people seeing equity coming out of their houses, people seeing their statements go down, they're not spending, and we're going to have some real problems with some economic numbers. But to your point, baby boomers are in their peak spending years. People between the age of 49 and 55 are doing the most amount of spending. We have 80 million baby boomers right now, almost a third of the U.S. population that are in their peak spending years. The Fed is going to fix this problem. They've thrown, everything at the wall to fix this problem. Yeah, and they're going to do it. We couldn't have a better person as far as a Fed chairman than we have today. So we're very happy with what he's done. So we think there's going to be two forces that are going to drive this market up. The first is going to be consumer spending coming back in the first quarter of 2009. The second is going to be euphoria around these markets. Really, whether it's McCain or Obama, we think the majority of the population want some kind of change. They want different policies in effect. They want different people in there. And we think just having a new set of ideas and different people in there is going to give us a euphoric bounce.
What if Barack Obama is elected, the senator, and he does raise taxes on people who make more than $250,000. What does that do?
Well, again, I think that's more longer term. I think we're going to have a short term rally. We think the Dow could reach 10,000 again if we don't go extremely too much lower than where we are today. We do think there's going to be some real problems. Again, as Barack potentially increases taxes, taking money out of the economy. But not only that, the later part of 2009, these baby boomers are now going to be slowing down their spending. So we're going to have reduced consumer spending, which has been driving this economy. And we're going to have these increased taxes, and it's not going to be good news. It's going to be a long-term bear market.
Short run, you think we're lower, but then there's opportunity.
There's going to be great opportunity. Right now, corporate bonds are a great place to be. I would be buying large companies, high-quality dividend-paying stocks as we get another 15% lower. dividends.
Harder to come by, though.
Yeah, well, I tell you, dividend yields are a lot better now than they were a couple months ago. And again, if we're getting 6-7%, investors getting paid to wait.
Tyler, it was great to see you. Thank you so much. Tyler Vernon, principal with Biltmore Capital Advisors.
Thank you.
Come back, and we'll hold you up to that prediction. Thanks. The world's largest